right. Well, good morning, good afternoon, or good evening, depending on your perspective on the world. And welcome to Trading Coaches Playbook. This is Brandon Wendell with you. And before we get started, I'm just going to remind everybody that we are not broker dealers or investment advisors. Taking a look at this information from an educational standpoint only. I'm not telling you to buy or hold any particular securities, give any personalized recommendations. There is always a possibility of loss in the markets, and we can try to do what we can to minimize the risk, but we cannot eliminate it. So there's always that chance. And also, we're not subject to trading restrictions here, so we can have a position in security or initiate one at any time. Thank you. I have a pilot's voice. I've always been told I got a great face for radio. No, actually, I used to work in radio, believe it or not, as a broadcaster for many, many years. Back in my high school and college days, worked at a lot of places up in Pennsylvania where I grew up. So good morning, Stephen. Good morning, Brenda. Good morning, Helen. Good morning, Paul. Good morning, everyone. Welcome. So just a quick reminder, we have a lot of programs going on here at Wealth Builders HQ. We got our premium workshops where you can see Trading You, the E-mini Think Tank Q&A coming up. We also have the Patterns in a Flash, and Trading You repeats itself regularly. I'm in charge of a program called the E-mini Think Tank. You see that on my shirt here as well. And we meet basically every Monday, Wednesdays, and Thursdays from 9 to 11 to discuss the futures markets and trading the futures markets. So we look at the different opportunities that are out there. And yeah, basically, if you click the link, you'll find out more information about that. There's also a lot of education on the website as well for the students of the program. And I'm also in charge of a couple other programs as well, but I'm not going to get into those right now. If you got questions on those, you can always ask me later. But today we are here to kind of look at charts, and basically, let me go ahead and move over to my charts. This is a live view of the S&P futures right now on a 5-minute time frame. And the topic I've chosen to talk about today is about reading price action. And I think that is probably one of the most critical things that we can do to become better traders. You hear a lot of recommendations, you see a lot of indicators, but really when it comes down to it, the best decisions are made based on what you're seeing in price itself. All technical indicators are based on past price. So if you could understand what's happening in price, both past and present, then you have a better indication as to what's going to happen in the future. And time is irrelevant, by the way. I can go out to a daily chart, and all the tools that I would apply and the way I would read price work the same way on this time frame as they would do on that 5-minute chart we were just previously looking at. And they work on any security. It's really agnostic when it comes to securities. I could switch over to Forex, stocks. It doesn't matter. Price action is price action. If I go to Microsoft, let's see, not in futures. Let's do all symbols there. You'll see that, candles are candles. Basically, what we're seeing is the actions of the participants who have been taking part in the trading on that security. That's all we're doing. So, what is the price of the E-mini different, or why is the price of the E-mini different from the SPX? Because of something called fair value. And basically, if you were to look at the index, this $ SPX on this one, right there, the index. Absolutely, yeah. Price and the relationship with RSI, price still ranks higher, Karen is saying. Absolutely, price is always number one. See, what happens is this index is a number that is derived from the value, a weighted value of 500 different stocks in this case. That's all an index is. It's a weighted value of something. Could be stocks, could be a commodity, it could be any number of things. And the futures are based on that. Now you got to realize with the S&P 500, you've got a couple choices to trade it. You could trade the SPY, which is the ETF, exchange traded fund, that follows the S&P index. And basically this would be like going out and buying all 500 of the stocks in that index in their weighted value. Now that's very expensive to try to buy all those stocks, obviously. So it's obviously cheaper to buy the index, the ETF, right? So if you're trading the SPY, would you be looking at the SPX or the E-mini? You should be looking at the SPY. Chart exactly what it is you're trading. However, if you're trying to see where the SPY may go, I would think that it'd probably be a little bit easier to trade and view the futures, because the futures are an exchange traded product Whereas the index, it is produced by the company and on the exchange. Standard & Poor's actually puts out the S&P 500 index, but there's a little delay. I mean, it's not much. I think it's only like 6 seconds. It's really meaningless at this point. It might even be faster now, but it used to be a small delay. And honestly, the futures are going to be moving real time with supply and demand acting on them. So that's why you use the futures if you're trading SPY rather than the index. So yeah, you've seen the ES used as proxy for volume. It could be as well. But really what it comes down to, the answer to the main question that came out was, it's fair value that makes the difference. Wrong page. So if we were to go out to, let's see, indexarb.com, you'll actually see there's the fair value. What I was getting at is if you were to buy all the stocks, it would be very expensive. However, it's cheaper to buy the futures. You get more leverage. So you put down a smaller amount of margin. Well, to make them more fair in value, so that way people actually want to trade the stocks versus trading just the futures, they change the value of the futures. They raise that value so it's more expensive to buy the futures. What do they raise it by? The interest that you could be earning on the money you're not spending to buy the stocks, if that makes sense. And basically, yeah, so the fair value today is $14.50. And basically, if you go to fair value decomposition on this page, hang on a second. Turn it off for now. If you go to this, again, indexarb.com, fair value decomposition, you'll actually see the calculation is nothing more than interest that can be earned with the number of days left until expiration. But if you own the stocks, you get dividends, whereas the futures you do not. So they subtract dividends for that. Okay. So right here, you can see there's 49 days left until the March contract expires. Interest rate based on the yield curve is about 4.92%. So the interest that can be earned is roughly 26.25, the calculation they come up with. And then the dividends that would be missed by buying the futures is 11.75. So we have a fair value number, and it's calculated in all futures. It just has to be shown on these three here. So there it is. That's the answer. That's why it doesn't trade at the same price. Now, another question just came in, and I'll get to our lesson too, don't worry, but I love answering questions. This is good. It's interactive. Is there a site to see the leverage ETFs? Yes. They changed the name of the site. It used to be etfdb.com, but I think it was taken over. Yeah, Vetify. It's still the same, etfdb.com. And I believe, is it under database? Oh, no, I'm sorry. No, there it was. Screener. Right here, ETF screener. Or I think you can even do it by type right there. And for type, let's see, A to Z, there might be some way of finding leveraged. Probably under L. Nope, alternatives, currency. I'm not going to go to, oh, there it is, leveraged. So if you want leveraged equity, there they are. And you can see how many times they're leveraged, 3 times, 3 times. I'll zoom in a little more so you can probably see that better. But there you go. ETFDB is a great website to find all the different leveraged ETFs. You can find the inverse leveraged ETFs. This is the pro shares. Just be careful with these. I talked to Direxion many, many years ago when they first released their leveraged ETFs. They are designed for day trading because the price and the leverage resets daily. So if you get a 1% gain, and then tomorrow you get a 1% loss, you're actually negative because the loss is 1% from the higher value. Okay. So since it gets calculated percentage-wise every single day at the close of settlement, you got to be careful with these things. They're great for day trading, but investing, you may not get the returns that you were expecting. So just be aware of that. Okay. And they'll probably tell you that if you ever read the prospectus. So anyway, I'm going to go into, like I said, my topic here for today is actually reading price. And of course, if you got more questions, let me know, and I'll be more than happy to answer those if I can. If I don't, I'll make up the answer and you won't even know. I'm kidding. I'm not going to do that. But when it comes to reading price action, it's actually relatively simple. Now, don't confuse simple with easy. Okay. They are two separate things. There are simple tools and simple things to look at to help us read price better. But it takes time and practice to get good at it. The nice thing is you can take all the time you want. There's not a rush, right? I mean, obviously people put pressure on themselves to earn in the markets, possibly for income or for wealth building. But really, when it comes down to it, there's not a clock ticking right behind you, hopefully. Then you should be able to take your time learning how to do this properly. And of course, there's mentors out there that can help you, like myself, and programs like the E-mini think tank that I mentioned, where I can assist you in learning to be able to read price better. But what it comes down to is really 4 main things. Number 1, color. Number 2, shape. I'm sure some of you probably heard me talk about this before. Number 3 is size. And number 4 is location. But honestly, if you can master those 4 key things, you're going to be well ahead of most people who are trading in the markets and even investing as well. That's true. Bill says, when you're my age, there's a life expectancy clock ticking. That is true. Yeah. Obviously, we want to make our lives better in the time that we have while we're here and try to do it as quickly as possible. But again, this is, when it comes to the markets, I believe it is definitely more of a marathon than a sprint. I'm sure you probably heard that before too. So when it comes to color, and we'll dissect each one of these a little bit more, but color is obvious. There's 2 colors that we typically use. Now, some people will change the colors of the candles because they're colorblind, whatever reason, or just for visual preference, they like a different color. But typically we have red and green, and normally red is bearish and green is bullish. That's pretty simple, right? So what we're going to be looking for is if we have a domination of one color over the other. If we get one color that's really dominating over the other, that is our trend. And really, it's a strong trend is what it comes down to. I should say trend strength. So when you're looking at and by the way, I also should take a little side note here. When I chart any security, I'm typically looking at multiple time frames. And that's something I've talked about in previous workshops here. So by the way, if you go to YouTube, our YouTube channel for the Wealth Builders HQ, you'll actually see the playlist from previous coaches' corners. And there's a lot of great videos out there by Ryan and by Tony and myself. And anyway, you can check it out anytime you want. It's all free. So a lot of good information there. But one of my previous ones, I believe I talked about trends and also multiple time frame analysis to get proper perspective on the markets. So you can look for that. And there we go. I got the link. Perfect. Thank you. So anyway, with trend strength, you get a domination of one color typically. So one of the first signs of trend weakness would be mixed colors. And we can test this theory out. Now, this would normally be on the trend time frame that we focus on. So when I'm trading, I kind of mentioned it before, I look at multiple time frames. I usually start off on a lower time frame. I call it my zone time frame to find where I would buy and sell. However, I take a step back to a bigger time frame to see which direction I should be trading. And that's based on the trend. So if I go back to my charts here, I'll go back to the S&P futures. Actually, let's go to NASDAQ. There we are. And let me clean my chart up real quick, make sure. There we are. So I happen to be on a daily chart. And on this daily chart, looking from the 6th of January, you can see the dominant color is green. Sure, there's a few reds in there, but for the most part, it is dominated by green candles, which means that since January 6th, you could say we are in a nice uptrend, right? Keep it simple. And when we are in a downtrend, you should be dominated by red candles. Well, we go back here a little bit, and you can see from, what is that, December 1st, we had more red than we saw green. That's it. Keep it simple. There's going to be other factors, obviously. It's not a vacuum, by the way. I want to make note that you can't just use one thing and rely on it. Okay. These are all little inputs to let you know what kind of actions or no actions that you should be taking in the markets. So if we happen to see mixed colors coming in, that's a sign of trend weakness. Trends can get weak before they pause or before they reverse. So looking at this, you see we're moving down with red. Then we get mixed red and green. try to get a domination of green. It actually makes more sense if I pull this to the hard right edge like that. So at this point, we've had our nice downtrend. It's interrupted and we're wondering, are we going to become bullish? Well, going forward a little more, you see that domination comes back. Therefore, we're in a bearish trend. And if you're trading on a smaller time frame, like a 4-hour or 60-minute chart, you should be shorting because the dominant trend is red. And we keep going. We got a green interrupting. Another green, we got some problems with the trend. We don't know if it's a reversal yet, again, but we have to take everything in consideration. The fact that we're losing our domination of red is a warning sign. And then it came back. Once again, getting a few more green in there. And now we have a bit of a problem because you can see we've got basically at this bottom point, 3 green, 3 red in the last 6 candles. And by the way, I wish it was so easy that, hey, if there was a number like 5 or 6 candles or 4 candles of one and then 3 of the other, it doesn't work that way. Unfortunately, every situation is going to be slightly different. But in general, if you notice something like this, where you're starting to get an even number of alternating red and greens, you probably have lost your momentum in the trend. And you need to be cautious and maybe tighten stops, take some profits, look around to make sure, is the trend going to continue or are we at the end? And of course, that's where everything started to change. You can see now, this was actually the first point right here that we had 3 greens together. We had 2, but now we have 3. So obviously the domination is changing. And we can look at a different security going way, way back. For instance, we'll go to Tesla. Yeah, just to demonstrate you could do this on any security. And I'll go to a 60-minute time frame and just pull this back to a random date. There we go. Happen to be in November. Okay, on a 60-minute time frame on Tesla, there's a domination of red. 1 green doesn't make a big deal or big difference. So we're still in a nice bearish trend. We're probably looking for shorting opportunities. Now we got 2 green. Notice there hasn't been 2 green together in the entire downward sequence there. So that's got to make you wonder, is this trend going to be continuing or do we have an issue? Well, back to the red, it seems that it was just a little hiccup and we're moving down more. By the way, there are always exceptions and always surprises that are going to happen. So just because I joke about this, everything always happens in technical analysis except when it doesn't. So you can't guarantee anything. There are no absolutes, unfortunately. But again, we're looking at the highest probability. That's all. Domination of red, a couple green there together again. We had 2 green before. It wasn't a big deal. So let's see, do we get more? We do. Well, now we got to take this a little more seriously. We may not be able to continue our downward momentum because we're getting more green. We lost our domination of red. And it's just a pause. And we continue. Again, only 2. Mixed colors again. This is what we saw before on the NASDAQ when it started to bottom out a little bit. We had lost our domination of the red, and we're starting to do that again. It's still dominant. 1, 2, 3, 4, 5 versus 4 blue or green. Sorry. Yep, it's still down. And let's see if we can find the bottom of this market here. Again, mostly red. Now we're getting 3 green together. Well, again, we had 3 before, and it was a pause. We'll have to wait and see if we're building up more momentum. Yeah, we're getting domination of green right here. This may be the end of the downward move and the start of the uptrend. Now, of course, it didn't tell us immediately when it was turning around because the color is happening after. We got to wait for candles to finish. We got to change the domination. But it's a good idea that if you've been looking for shorting opportunities, maybe stop doing that because you're probably getting some small losses and getting chewed up a bit. And well, it's trying to resume, but it can't. Look at that, just back and forth. And you can see overall, though, right here, we started getting more of that green. We started rallying from that point. So anyway, that's all I'm looking at is what is the dominant color and when is that domination being lost? We still don't really have it. Now we're getting more reds. Back and forth again. But overall, mostly red and still going down. Let's see. No change yet. Now we're starting to get a little more green. There it goes. As I said, a little more green here before I went to gap up. 1, 2, 3, 4. Still about 5, 6 reds though. And then it started to change here. Still not really strong though to the upside at all. As you can see, it keeps pulling back. So that is color. Basically looking to see when the colors start to shift, you might be getting a trend shift as well. And a weakness. Now shape of the candles. Basically, the candles tell you a story. I used to talk about the tail of the tails. Okay, because you get wicks or tails on the candles. Basically, what we're going to be focusing on primarily is the close versus the high and the low of the candles. Oops. Sorry, just getting messages here. Oh, okay. So basically, we're looking at the close versus the high and the low of the candles. Just quick review. You probably know this, but green candles close at the top of the body, and red at the low of the body. And basically what we're looking at is if you have a bottom tail or wick, that is buying pressure. Okay, bottom tail or wick is buying pressure. Basically the low to the close, and that could include the body as well. That is buying pressure. Any price action you have from the low to the close is buying pressure. That includes the bottom tails or wick. Doesn't want capitals there. And basically topping tails equals selling pressure. But it doesn't just have to include the tail. Basically the price, the high to the close is selling pressure. Okay, so keep it simple. In addition to the color, you got to think about it. There are some candles that are green, but they're bearish because there's a large tail. Hang on just one second. All right, sorry about that. So anyway, basically we can see even red candles could be bullish sometimes. So once again, I'll just go back to Tesla as an example, and we can take a look to see, is there any indication that trends might be getting weak? Sometimes there will be, sometimes there won't. For one, you can see that on the right-hand side, prices were moving to the upside. And we ended up with a candle with no body right there. That's called a doji, D-O-J-I, which in Japanese is little boy. Typically, the candle is read as if the little boy's lost his way. He doesn't have very good sense of where his direction should be, and that's indecision. But looking at this a little closer, and I'll zoom in more so you see it, you can see that that doji happens to have a little bit more topping tail. Whoops, there it is. A little bit more topping tail, a little more room from the high to the close compared to the low to the close. That's selling pressure. So we had a little bit of selling pressure here, almost none, and then more selling pressure coming in. The next candle, which you already saw, had more selling pressure. So since the selling pressure is getting greater, we have a higher probability of moving down rather than up. And there we go on the next candle. Now, even here, there's a little shift. Notice very little buying pressure, more buying pressure. So even though it's very bearish, there's a little more buying pressure coming into price, and we may have a harder time moving down. Yeah, we still moved down, but not by much, did we? Now we gained a lot more selling pressure, still selling pressure. And we did make a new low, but as soon as we did, we were met with buying pressure. So it's not perfect, but this gives us a probability of what might be happening next. This candle is showing us lots of buying pressure. And we closed almost at the top. That means that we might be getting ready to rally more. And unfortunately, it was met with a lot of selling pressure again, but we did make a new high first. So like I said, it's not perfect, but it can definitely give you an assistance as to which way price is likely to go. Let me check out crude oil. Oops. Oh, we're on March. There we go. Like I was saying, it happens on every security, every time frame. Once again, we can go out to a daily time frame if we want and go back in time just a little bit, not too much. And you can see some warning signs sometimes, not always, but you sometimes get some warning signs before prices reverse. Here is one. We had a green candle with lots of selling pressure from the topping tail. Next thing you know, prices are moving back down a bit. Keeps moving down. Indecision. We got selling and buying pressure almost equal. A little more buying pressure, but almost equal. Now we have to wait and see which way is it going to go. Will we continue the trend downwards, or will we find a push back up? Looks like it was the push back up. Back and forth. A little more selling pressure. Still a little more selling pressure. And there we go down. Now we're getting buying pressure, right? We just broke to a new low, couldn't close at that new low. So we're seeing buying pressure pushing us off those lows a bit. Still trying to push off the lows. And finally goes a bit higher, but it's being met with selling pressure almost immediately. This may become a failed little rally here. Yeah, sure enough, it was. Look at that. We had a warning. I said it might be a failed rally because immediately when we couldn't close off those lows, we thought it should rally, but there was no follow through here. We were met after all this buying pressure with selling pressure, and prices go back down. That's it. Just reading price action. So again, it's not perfect. Just because we have a lot of selling pressure doesn't mean the next candle won't be a large green one. But the probability is that finally, since we closed lower inside of what used to be buying pressure, that buying pressure is probably gone, and we have a higher probability of being able to push lower now. There it goes. We made our new lows. Okay, again, there was selling pressure. Once again, we're being met by buying pressure. You got to wonder, is this going to pop up a little bit? Certainly did. So price, again, any time frame, I can take this all the way down to a 5-minute time frame, and I'll go forward a little more. Oops. There we go. And right now we're seeing buying pressure as we go forward. Again, more buying pressure, even though it's red. Now selling pressure. Looks like we might be going sideways here. We're getting both buying and selling pressure, and the candles are getting really small. That's usually signs of sideways movement. And it is. When you look at the whole action there, it's going sideways. By the way, you can practice this on your own, right? You don't even need the markets to be open. You just go candle by candle. What is this candle telling me? And what is likely to happen next? The other neat thing you could do is, if I go, just look at where we are now anyway, and go back to where there was a big change in trend direction. You know, was there a warning sign before it changed direction? Here we're a nice move to the upside, and you can see we kind of changed right through here and started moving down. Right in here, we really got the big downward movement, obviously. And then, of course, we bottomed out right there. So going back, take a look and see, was there a warning sign as we were moving up to that top? Did the market tell us that it was likely to go down? Well, we actually didn't have as much selling pressure. So far, no. Now we have a topping tail on the candle. Again, that's selling pressure after we were rallying. We had a domination of green right here. Again, starting to mix these together. Let's see if the red starts dominating. Well, we tried to pull back. There's still buying pressure. Now we have selling pressure again. So we had sell, buy, sell. Indecision, we're closing in the middle. And now we're getting our selling pressure getting a little stronger. And just looking overall, we're not getting our domination of green anymore, are we? We're mixing with the reds. So we may be done with this move to the upside. Even though this is a small time frame, I could use the same color and shape on the small time frames I'm trading on, as well as the trend time frame. You can use it anywhere, any security. And there we start seeing the move down. Not quite yet. It's holding up. Now we're getting nothing but selling pressure, really. Very small bottom tails altogether. Can't seem to go down yet. It's fighting. But overall, you see we're dropping, and we have a domination of red again. Okay. Do the Qs. Okay. Like I said, it could be anything. Really doesn't make a difference. This is current price. Again, you just look to see, where did prices change direction, and was there a warning sign? Going back to yesterday, 25th into the 26th, you see we had this huge gap up on news, right? We have earnings news caused that big gap, selling pressure, more selling pressure, and we start to turn down. It's not really a big surprise. A little bit of buying pressure caused the halt. Selling pressure, nope, buying pressure again, it's mixed. Coming back up to the highs, and we got mixed colors again. So there's not a strong bullish trend. You know, we had 3 red followed by 3 green, which is mixed. This was big selling pressure, followed up with more selling pressure. And there we go down. As we come down to close the gap, still not really getting anything big here. We're just back and forth. Domination of green, by the way. Now we have a big topping tail for selling pressure. We'll see if this is going to collapse. Nope, just fell off a little bit. Might just be a pause. Again, a little selling pressure coming in, but still can't really break out of the sideways range. And now we finally get that lower close with more selling pressure. But can't seem to go anywhere. Again, can't break out of the highs. We get these topping tails every time we come near those highs. Finally breaks out. Selling pressure at the previous highs, might be getting ready to fall back down again. Domination of green, so we're in a bullish trend on this time frame. But there's your weakness. Notice how we had that topping tail candle followed by a new low being put in price. So yeah, you can do this, like I said, with any security. We can look at current price right now as we were moving down. Let's see, that was this morning, wasn't it? As we're moving down, we were met by buying pressure on that green candle, as well as even this red one had a lot of buying pressure. Now we got a domination of green, but it's been interrupted, indecision, selling pressure. So we're likely to go a bit sideways and pause right now. Doesn't mean the bullish trend is over, because we still have a big domination of green. And I can even go to a 30-minute time frame on the Qs and see pretty much all green, right? Ever since that little hiccup this morning as we tried to close the gap. So that's our trend. Now, the next key thing that I look at is size. And that is the range of the candle from low to high. So that's including the wicks. Okay. And again, there's not set definitions for all these things. It's kind of a subjective to a certain extent. You just got to get used to the securities. But typically those securities do repeat themselves kind of over and over and over again in how they act. So what I mean is you'll see these patterns developing. So when it comes to the range of the candles, we typically see sometimes what are called narrow ranged candles. Okay, and they're basically smaller in range. And the candles around them. And they indicate weakness in the trend or indecision. Now, indecision could be a pause, or it could be a reversal. Really what's going to give us the difference is going to be a location. But yeah, narrow range candles, if you see a bunch of them, typically you get a bunch of them together. You don't just get one, but it could happen. typically, if you see a bunch of them together, you're getting a pause in the trend, and you're likely to see reversal again if you're at some sort of a resistance or supply zone or demand or support. Okay. Now I'm still on the cues. I can take a look back and see, even on this 30-minute time frame, do we have anything like that? Well, don't necessarily have any great examples of it. Maybe here. You can see as we're moving to the upside, large green candles, kind of smaller red. And then the last couple greens were pretty good size. Again, I'm looking at the full range between highs and lows. And then those 4 candles right there, all 4 of them together, very small ranges, aren't they, compared to the previous candles around it? So that's indecision. Basically, there was either one of 2 things happens in that area. One, there's no more buying pressure, just kind of died off, and therefore prices are not rallying anymore. Nobody's really selling. It's just nobody's really trading in that area, but these are time-based candles, so you always have to get new candles being created. So there's very little action there. Or there was a lot of buying pressure, but it was met with an equal amount of selling pressure. And therefore, everybody's transacting around the same price because there's a buyer for every seller or seller for every buyer, and we just keep going sideways. So there's basically equilibrium here, either from a lot of people trading or very few people trading, but there's equilibrium. The buyers and sellers are equal. And that's what that tells us. That could happen when we're pausing or we're getting ready to reverse. In this case, it became a reversal correction. It won't always be that way, but it can happen. Again, it's in conjunction with the other things: color, shape, size, and location. Okay. So let's see if I notice any big examples. Heck, we can go out to daily charts and see it from time to time too. Right now, we don't have anything. Well, it's not the best example, but right here, we had a small rally. It's kind of perspective. You got to change to see it sometimes. Anyway, there you go. You see our candles as we're moving up. And right here, we got a bunch of smaller red candles. Well, first of all, we lost our domination of green. You can see there's topping tails on those candles, and they're somewhat smaller than what's around it. Next thing you know, we're moving the opposite direction. So that's another thing we can look for again, is just that lack of commitment to the trend. Why this keeps doing that. Anyway, now the other side of that would be expanded, or sometimes people call them extended range candles. And those are large. I can't spell today. Compared to the surrounding ones. That's all. You see those large candles compared to the ones around it, that gives you an indication that there may be certain things happening. Now, this one comes down to location. Okay, so basically, if you get an ERC, and by the way, I should mention I abbreviate these for speed sometimes. So this one would be NRC, or narrow range candle, and the extended or expanded range candle is ERC. There we go. So if you see an ERC in the direction of trend, those are novices chasing price. And basically, novices chase price usually right before it ends. It could indicate either a pause, a correction, or the end of the trend coming. Not guaranteed, but again, it's very often that's what happens. A lot of times you'll also see them breaking out to new highs or new lows. And then I'll get this one here, RC, there we go. So, and usually or often, the end of the trend or a pause and a correction. Usually happens at breakouts of new highs or new lows. A lot of people love to buy the breakouts. Problem is, many of those breakout trades actually fail, and you get pretty deep corrections one direction or the other. If you're moving up, they get pullback. If you move down, you get the pullback. That should be large range candles. There we go. That's better. So, we can look for that. And I don't know if this would be one on the right-hand side, but that is a large red candle after a drop. So you got to wonder, is it going to be the end of the move? And you see there's a little pause here now. You've got selling pressure and buying pressure almost equal right after that occurred. Let's see what happens. There's your correction. Look at that. It did come back. Now, it went down a little bit further before it came back, but nonetheless, it came back and retraced a lot of that candle. Let's see, do any other examples as I go forward? Hang on. There we go. Again, I'm looking for the same color candle as the trend we were in. It should be much larger than the ones around it. What am I on here? This is a daily of the Qs. Nothing too much yet. Again, we got to find a really good strong trend that ends with the novices. So we're rallying up, and that's where we are currently, isn't it? So I'm not finding one yet. That doesn't matter. Again, I can look at different securities as well. Just randomly, I'll go to gold. I don't know if we're trading the February or the April one yet. Spend a little more time on the SPY. Okay, I can. That's fine. I can use any security. It really doesn't make a difference. So if I go back to, let's say, 60-minute time frame, and once more, just look for the novice candle. There's one right there. I don't know if that was a breakout, but you can see nice run to the upside. And then this candle seems to just kind of stand out. It's not really that big, to be honest with you, but it is a little bit bigger than some of the other ones around as far as the size. Next thing you know, we're coming back down. And right here, I'd be a little bit worried too, because as we were moving back down, you see the candles started getting larger, didn't they? And now we've got this much larger candle after this move down in price. We might get a bit of a bounce before we go lower. There it was. Look at that. That pretty much marked the end of the move down, didn't it? And again, it's just subtle, and there's not a set size like 5 or 6 times larger. No, it doesn't matter. Just overall, when you see a bit of a larger range candle than the ones around it, if you're moving in that trend direction, you might be done with the move. See if we get any more coming up here. Not yet. Now that's a new candle going in the opposite direction. Might as well bring that up. Notice we're moving sideways after an uptrend. We get a large candle moving down. Yeah, sometimes it shakes it out before you keep going. Absolutely. But if you get an ERC starting a new trend, those are the pros trading. And often that trend will continue because it's the pros jumping in and causing that new direction to start. And there's no opposing pressure. A lot of times those professionals will buy when prices are really depressed, they're really, really low, and you get that big candle moving up because everybody who wanted to sell already did. So for those professionals to buy, they have to address that and raise their prices much quicker than they normally would if there's somebody there selling to them, and vice versa. So right here, this is a large candle. Obviously, stands out right there compared to the other ones around it. It's the biggest candle on the screen, but it was after a sideways move. So those are the pros kicking off the move down. If prices come back to that area, there may be leftover professional orders to cause prices to drop again. I don't know. We can mark this off and see if that's what happens. I'm not saying this is necessarily good resistance or supply zone, but yeah, you see it didn't really matter this time. Didn't even really pause us at all. We just kept going through it. But typically that's the kickoff of a new trend, and it did last for a little while. Let's see, we're breaking out to the upside. That's not really a novice candle. I would worry a little bit about it because we did have that topping tail as we broke out. And there's your correction. Let's see, where am I at? 124. getting close to the end of the session there, so I'm not sure if we'll get any more examples here. Oh, there we go. Notice moving to the upside nicely. Now we have a much larger range candle, especially compared to these 4, 5. All 5 of those green candles are much smaller than this green candle, right? So this could be the end of the move because we exhausted all the buying pressure. And look at that. It retraced almost 100% of that candle, went all the way back down to the open of it. Now we're still getting buying pressure. So we may go higher. As Karen was saying, this might be a shakeout before they go up higher. And in this case, it was. That's today, by the way, isn't it? Yeah, that's today. A little shakeout before it went higher. And if you can identify those candles, I mean, you get a little heads up before price action happens. I'll go down to, say, a 15-minute time frame here and go all the way back. There we go, way back in 2022 in October. And you see examples. Let's see. I can pull this a hard right edge, hopefully. There we go. Nope. Come on. What's going on? I was trying to highlight this one right here, this red candle. It's not the best example because you had a little green before it, but overall you've been moving down, end of the move down, start of the move up. And it didn't last too long, that move up. And as I go, there we go, professional candle again. We're moving in a downward trend. Get a large candle back up. We may end up seeing prices return to that area and bouncing because the pros are buying there again. I'm just going to highlight the whole candle just to give us an idea, but that's not normally how I would trade this as a demand. I'm just showing you that's where the pros were buying. And look at that. The trend is continuing. It's kicking off. You notice we did do a little pullback, but we couldn't retrace all that candle because the pros were buying and caused the move to the upside. So let's see if we ended a novice candle or not. Still moving higher. Nope. We did end with narrow range candles, right? And a lot of wicks and indecision before we drop back down. Just trying to see, I don't have any preset examples. I like using live markets, so I don't know. Now we're moving down. That is an extremely large candle after move down in price. If you've been making money on that short and gap closure, I'd be really suspicious now and wonder, is this going to bounce? And it was just a pause before they went lower. As a matter of fact, normally I would expect that to retrace completely, and it just didn't. I said there are always exceptions to the rule. Just because that was a novice candle and it did try to break new lows, it actually didn't retrace all the way. And we're just going back and forth. Again, let me see if I can find a good trend in the example. By the way, notice where we are again. We are right back down to that example where the pros were buying, right? And it looks as though we came back. You want to do that? To the untested portion? Nope, we didn't quite get down there. I was wondering if we went to the untested portion. But remember, I said the pros were buying here. We come back down. It might be a buy opportunity. And it was initially. Look at that move. Unfortunately, it didn't last very long. As you see, it came back down. Question, what does it mean if the candle doesn't have any wicks? It means it was a very strong candle and there was no opposing pressure. You closed at either the high or the low. That's all. Yeah, so there's no opposing pressure. Now, the size of it can also mean something too. Like I said, if it's a large candle with no wicks, then you had really strong pressure in one direction or the other. If it's a small candle, then you had good pressure, but it wasn't very strong. So let's see, any more examples? No, not really. Getting close to the end of our workshop here for today. Yep, it was subtle right there. A little bit bigger. It wasn't really one that stood out, but right there, you're getting a little bit bigger candles. You see how it kind of grew progressively, but that larger candle, again, breaking the prior lows after moving down. And there's your pullback before we can go any lower. Actually, it looks like we're basing now. And there we go higher. Still trying to move up. Nope, indecision with the colors. Back and forth. And then finally going higher. Let me clear this. There we go. Oh, professionals selling off after moving price. We get the pro candle back down. Once again, this area may prove to be where the pros were selling and could give us another opportunity. We just had this larger candle once again. Wasn't really extreme compared to this one, but it is larger than the previous, and we might get a bounce. There's your bounce. We're back up to where the pros were selling, and we're being met with selling pressure. That was a good opportunity. It didn't quite get all the way up there, but it came into this area, as you can see, right? So pros versus novices. You can kind of see sometimes, and when you take a step back, by the way, and just look at price action and some of the big turns, again, there's usually warning signs at many of the turning points in the markets. You know, big move down right there. We close near the lows. We gap in the opposite direction because that was a novice candle. Another novice candle right there. We reverse back up before we go any lower. So you'll see them quite often. Just got to know what to look for. And then the last one, which I'm not going to have enough time to discuss in full detail, but again, there's videos on that in the E-mini think tank on how to actually look for that. Location really is what I'm looking for with supply and demand. Okay, now a lot of people talk about support and resistance when it comes to technical analysis. I don't use those as much as I use supply and demand. Basically, I talked about how the narrow range candles are more or less equilibrium and balance between buyers and sellers. Well, supply and demand are imbalance between buyers and sellers. And a lot of times it's right where you see that expanded range candle with the pros trading. You know, starting that new trend direction, kicking off a strong move without opposing pressure. So I'm going to be looking, and again, there's specific things that I look for with the patterns. And then, as I mentioned, if you go to, oops, where is it here? Got so many things going on in my pages. Right here, my E-mini think tank. Hopefully I'm still logged in. I was sitting for a while. Yep, I am. You'll see that in the E-mini think tank, we have our live sessions, as I mentioned, 3 days a week for 2 hours each day on Mondays, Wednesdays, and Thursdays. And then what happens is there's also a bunch of recordings. First of all, the classes are all recorded, but there's bonus videos and documents to help you learn these things. So when it goes to the bonus videos, I mentioned trends. There's a video on trend, and there is right there, trading routine and finding zones. And basically the zones, the supply and demand zones I look for, sorry, let's see what's going on here. Oh, deliveries. Those supply and demand zones are where we find the opportunities. Exactly. Steven's saying imbalance is where the opportunities are. That's exactly it. So I not only have the video, but accompanying the video, there are documents that show you step-by-step leg-based zoning techniques, how I actually find those opportunities. By the way, there's also a document, if you join us, what is here, and it goes step by step what you should be watching video wise and what documents go with it to kind of help you out, because there is so much information here. But basically, this information is here to help you learn to trade in the futures market predominantly, but honestly, this could be used in any market. Zones are zones, no matter where you're using them, as I showed you. Okay. It was amazing test on the 15-minute opening range on the NASDAQ this morning. Oh, nice, Roman. Yeah, if you take a look, I think it was even on the Qs. I noticed, whoops, wrong button. Symbol, QQQ. Go to the end here. There were a couple things that happened, honestly, today. One was there was a gap up this morning, I believe. Was that today? No, it wasn't a gap up. I'm sorry. I thought there was a gap, but I guess it wasn't. It traded up and then came right back to the prior day's high before it bounced. But yeah, you're right. There's the first, the opening range. That's another strategy, actually, that Roman is mentioning because he's in the class. But if you go to, where is it? Yeah, E-mini opening range news breakout fade trades. I have a whole strategy that we practice pretty much every day. And again, there's documentation that goes along with it that teaches you how to trade things like this. And what happened today in the NASDAQ is you can see this was the first candle of the day, and price came back, retested it, and gave you an opportunity to buy and it pushed up. And right now we're seeing a little bit of selling pressure with that topping tail. That means we're taking a pause. It doesn't mean the trend's reversing. Yeah, we're getting narrow range candles after a move in price. We're probably pausing. A little bit of selling pressure as well. So could be a pause before we keep going. Tesla's hitting the 89 for the second time on the daily chart. We can take a look. And we're going to have to wrap up here in a couple of minutes. So if you guys have any questions, by all means, ask away. I'll take a look at a few of these for you. Oh, that's the wrong one. I think it's this one. Yep. As I go to a daily, doesn't look like it's there yet. I've posted many opening range trades, taking the mini think tank on the Twitter, and there's been many winners. Yeah, absolutely. It's coming close to it. You're right. There's the crossover. This is another strategy that I teach in the class. And Karen is one of my students as well in the mini think tank. So she mentioned this. I use these two moving averages to help with identifying trend and opportunity. And it looks as though, yes, we do have a possible sell area on Tesla. It's a little above the moving average, but let's see, what's the high here? 194.76, close 194.70. Yeah, so close inside 86. Oh, you know what? That green one closed above. So I don't know if that's a really good zone, honestly. It might not qualify. And there's decent selling pressure. It's not the best. Let's see. And there's not really a good one down here either. So I might be a little careful with that one. I don't know if that's going to be a good one. Like I said, there's always rules. I want to follow the rules. I get more success and more consistency when I follow the rules, obviously. Now, if I go out, let's see. Just looking at E-mini think tank tracking for the month of January. I don't think I haven't done the percentage gains yet. I have to go through and do those manually, but these are the trades we've taken so far for the month and how we've done. And it's interesting because I'm a loser. When you take a look at it, I'm a loser. We had 13 winners and we had 16 losers. See if I can enlarge this a little more. Come on. The bar won't disappear at the bottom. There we are. Anyway, I've had more losers than I've had winners this month. 44% winning. That's it. But it doesn't matter. You don't have to be a winner all the time. You know why? My average win is almost $1,500. My average loss is less than 400. So I could be right 44% of the time and walk away with profit. That's a key to success right there. Keep the losers small, keep the winners large, period. And I actually have to check to make sure this is fully adjusted. So I don't know if I added some new ones. It is. It's all about risk management. Oh, nope. There's a new one there. K81. And on the losses, make sure I added all those in. Nope. There's two more need to go in. K71. And 84. So yeah, it actually helped a little bit, 1445 and 344. But again, it's all about risk management, keeping the losses small. I can have more losses than I have winners and still be successful. And that's a pretty cool thing when it comes to trading. So if there's any other questions, let me know. I'll go ahead and back to these notes real quick. And that's the notes that I wrote up for the class for today. Hopefully it helps you with reading more about price action. If you want to learn more about it and hang out with me and get the access to all the education, again, you can click on the link that'll be put up in the chat in just a moment for the E-mini think tank and join me in the class. If you want to just kind of test it out, kick the tires, so to speak, if you do the quarterly subscription, there's a 2-week free trial automatically. You get a 2-week free trial. The E-mini Excel file available for download? I think it is. If it isn't, then I will put it in for download. I think most of them are available at the end of every month. If I go to, let me go back to my browser again. Should be in documents, I believe. Tracking sheets. Yep, there they are. So yeah, I do the tracking sheets. And then I thought there was the previous months. I got to check on that. If it's not, I'm definitely going to get them posted, but definitely the tracking sheets are there. So yeah. When will Trading Coaches Corner do an SPX alert workshop? We'll see. I don't know yet. I know I'm doing one for TradeStation coming up pretty soon in February 7th, actually. I'll be doing a free workshop on the SPX. talk a little more about that. So anyway, I want to thank everybody for being here. I appreciate it. If you got more questions, you can always hit us up at support@wealthbuildershq.com. That way you can get a hold of us and ask more questions. If you want to join the program, as I said, if you join the quarterly subscription, you get 2 weeks to try it out. We don't even charge your card for the first 2 weeks. Try it out, see if you like it. If you don't, then you just cancel. No big deal. And if you do like it, then obviously you just subscribe, and that'd be great. So until next time, trade safe, trade well, everybody. And yes, happy trading to you too, Brenda. Thank you. Thank you very much for being here. Appreciate it.